Hey guys, Akil here. Welcome back to the channel. Today we're going to talk a little bit about strategy development. So there's an old saying in trading that goes, sell in May and go away, meaning that as summertime approaches, the markets tend to slow down and the volatility decreases. Now, it's very important to understand that this doesn't necessarily mean less profitable, it just means less busy. And my personal experience in 19 years of trading, I've had some very profitable summers, I've had some very rough summers, and I've had everywhere in the middle. So I just don't want you to make that confusion, especially if you're more of an active trader versus a passive investor. With that being said, again, the volatility is lower, so there is a lot more downtime. And honestly, one of the things that I enjoy most about this time is because of that slower pace, it gives me a lot more free time to do things that I like to do, like work out and spend time with kids, but also get back in my strategy development bag. And in fact, this week, that's been the main topic that we've been discussing with our Tier 1 traders. It's only Tuesday as I'm recording this, but so far this week, both in our Monday meeting and in our Tuesday live trading room, we spent a lot of time talking about building and, more importantly, refining trading strategies. And in today's clip, I want to share with you a part of that discussion where we talk about a trend trading strategy and, well, I guess one of the biggest choices that you're going to have to make if you decide to trade one. If you're going to be a trend trader, you're going to have to make a choice. Do you want to build your strategy in a way that allows you to catch those massive winners while accepting the fact that you'll often have to give back some of those profits? And I do the air quotes because they're technically not profits until they're in your account, but what seem like profit as your account says it's up this much before exiting for less, of course, as the market retraces and takes you out for whatever your stop loss is? Or do you prefer to take quicker profits? I'm tired, I'm out of shape, it's summertime, I haven't really started to working out yet. I'm one day in, so I'm getting there. I'll do that again in a few weeks and I'll be better. But the point is, do you want to get in and out more efficiently, lock in those games early, even if that means kind of watching the market go on without you to make more would-be profits? And again, I say would-be profits because if you're following your trading plan, they weren't your profits anyway, but that's how we tend to think when we see it happen. And that's a discussion for another day. Today, I want to hammer home the fact that no matter which of those options you choose, you're not wrong, right? There is no right answer. There is only the right answer for you and your trading personality and your trading philosophy. And again, I'll share with you a podcast episode or a video at some point about how I made these decisions in my personal trading career. It's on my to-do list at some point. The point today is this. No matter which one of those scenarios you choose, you are going to be forced to deal with pain. Some traders hate seeing profits disappear. Other traders hate seeing the market run away without them. And just to show that you're not alone in this struggle, here are the results of a recent poll that I put up on my YouTube community page asking people which of these two scenarios caused them the most pain. So as you can see, you're not alone. Now, before we hop in, also want to remind you guys, if you are feeling alone on this trading journey and you want to spend your days around a great group of like-minded individuals, all working towards the same goal that you are, definitely check us out over at www.tier1trading.com. We have courses, but more importantly, we have coaching and supportive resources. There I go, rhyming again. But seriously, as the summer frees up some time for you, certainly check out that 14-day risk-free trial membership. It gets you on the platform. It allows you to experience and really make your own decisions with no investment and no sneaky auto bills or anything like that. www.tier1trading.com. I can't wait to see you on the platform, and you can't wait any longer for this video clip, so let's hop in. You can shoot for like these big old swings where it's like, if you're just trading it with no filters, like one crosses the other, you have your cross right here. And then you can see that this thing goes, and this is the kind of the hard part of trend continuation trading, right? So you see this and you're like, man, at one point, this was up 469 pips. I have not seen the MJ film. But then you gotta, if you're getting out at the reversal signal, then you're getting out up here at 235 pips, which I think all of you guys would be happy with 235 pips, right? Would you guys be happy to make 235 pips out of a trade? Yep. But would you still be happy to make 235 pips out of a trade if at one point you were up 470 pips? This is very interesting, right? Remember, I think it was last week I went on that big rant about my stories, my war stories of a money manager, and I told you guys that when I was young and doing my pitch for potential investors, I was just like focused on the profits. And they schooled me and they're like, hey, what type of drawdown do you take to get these profits? And I was like, hey, well, and they're like, well, look, it's one thing to get profits, but I only measure profits in comparison to what type of hit you took to make those profits. So it's all good that you're showing me a 50% return, but if you took a 25% drawdown to get that 50% return, that's not something I'm comfortable with. I would much rather have you return me a 20% return, but only take an 8% drawdown. And like in my mind, I'm like, yeah, but 50% return on investment is more than double 20%. So like, duh, you made more money. And they're like, listen, youngster, you're thinking about this all wrong, because that 25% return or a drawdown that it took to get to that 50% return, yeah, that's 3 times the risk that I'm comfortable taking. So like, I've got a lot of money. I don't necessarily need to shoot for the moon, but ain't no way I'm risking it. And I was like, oh, that makes sense, right? So it's interesting because you hear that, and then you look at something like this where it's like, again, if I promised you 235 pips out of a trade, you'd be like, hell yeah. But for some reason, it's different when we say, hey, you collected 235, but at one point you're up 475. And here's the thing, right? My mentor always told me this, right? Pips don't count as pips until they're in your pocket or your account version of your pocket. You guys get what I'm saying, right? They don't count as pips until you're in your pocket. Because what happens is, like, we count these pips, we're up 475, and all of a sudden, you start believing that you're actually up 475. You start believing that. Therefore, when the market gives a little bit back, and that's the nature of a trend continuation strategy, if you're going to do something like that, because you're never going to call tops and bottoms, you're always going to give something back or leave something on the table. If that's the nature of it, right, it shouldn't feel like you lost money. But because we're human beings and we don't think rationally, it does feel like we lost money. It feels like we lost half of our profit. And that doesn't make us feel good. And then we get angry, and then we get weird in the brain, and then we do weird things on the charts, right? And then the next time we get down here, and let me find another example for you. The next time we're in a trade, we're looking at this thing, and we take a trading signal up here, right? This big red candle. And now, and I'm telling you because I used to do this, right? This is a personal story. I've seen many other traders do it as well, but I was right in this car. You see this thing, it's going down, it's going down, it's going down, and all of a sudden, this one isn't as big, obviously, but you get down here to whatever that threshold is, 114 pips, and you're like, well, last time I held it, and it reversed against me, and instead of 114, I only took home 50, so I'm just going to get out at 114, and then it goes lower and lower and lower, and you could have made a lot more, right? And then we reverse it, and we're like, oh man, last time I was in a trade, I got out early, and then I bailed, and then we're doing all types of weird stuff, and it starts one of those spirals we spoke about earlier. So that's one of the gifts and the curse that comes with this particular strategy, right? But in general, any type of trend continuation strategy, it's when you're shooting for those home run trades, it's awesome because you make because you make a lot of pips, but you also give back. I don't even want to say give back a lot of pips. You also have to mentally deal with being up a large amount and be comfortable giving some back to the market. You also have to be comfortable with sometimes maybe not necessarily in this particular strategy, but sometimes going all back to break even. Then on the other side of things we spoke about, right? If you're shooting for a short conservative approach, right? One of the ways I tried doing this was just like shooting for, hey, I'm gonna get in and out, right? Trading mercenary. I'm gonna take the signal and then 2 ATR stop, right? 2 ATR stop. We're using a Parabolic SAR, right? Devin mentioned the SAR. We'll bring that on next, right? But I'm gonna use a 2 ATR stop for my targets, or a limit for my targets, and I'm just gonna get in, get out right away. And then you get in this trade, You write it down and you're like, okay, boom, 80 pips, I'm out. And you feel good at the time. And then it goes down and you're like, mother, boop, could have had 400, whatever like that. And then you get upset about that. And I can tell you, I work with a trader on this very strategy where he was trying to convince me. We're doing our Q&A sessions, we're meeting on Mondays, and I'm telling him, because I'm working on the same thing with him. I'm like, hey man, you got to make a choice. Either you're going to be a mercenary trader where you're going to get in, you're going to get out, you're going to get your money, and you're going to leave those big runs on the board, and you be okay with that, right? You're just going to kind of poke and prod and hand in the cookie jar, taking crumb after crumb after crumb after crumb, or you're going to wait outside, act like you're playing in the yard, wait for mama to leave the house, right? And then you're going to sneak in and you're going to grab all the cookies. But it's not going to happen too often. Mom's not going to leave the house too often. When you're looking for crumbs, you can kind of, on your way to the bathroom, take a crumb. On your way back from the bathroom, take a crumb. Oh, I'm going to the kitchen, take a crumb, right? No one really notices. And he was like, Akil, I want to do both. And I'm like, how? I'm like, what do you mean? He's like, I want to take all the big winners, but I also don't want to give anything back to the market as if I were taking small winners. And I'm like, impossible. And he said, I'll show you. And then I got an email like a year later. He's like, man, you were right. I couldn't do it. And I was like, I told you so. No, I didn't say that. In my mind, I said that. But yeah, you gotta make a choice, and you have to be comfortable with that choice. Because like anything else in trading, there's a give and a take to everything. So it's, you're never gonna win. You're never gonna get the best of everything. It's impossible. You just have to. You gotta settle. You gotta be okay. You gotta be okay. You got to be okay with it. But so like another version, if you want to combine the Parabolic SAR, which I told Devin, I love the Parabolic SAR. I don't use it in my trading, but I love it. A good example would be maybe throw a Parabolic SAR on there, and let me just thicken this thing up some. Boom. So this little blue X is my Parabolic SAR. So let's say that you're using this as either your exit or your trail. So entry is on the cross, right? In this case, this little red candle right here, I had the wrong one measured before. ATR is right, or ATR. Entry's right there on the cross, right? What you're doing is you can put your stop loss above at the Parabolic SAR, and then you just trail it as it goes down, as it goes down, as it goes down, and then boom, you're stopped out on trails right here. You guys see where the price action came back through that cross, or where the cross reverse sides? Right? So that's your trail. Hope you guys enjoyed the video. Again, be on the lookout for a future Trading Coach podcast episode. I'm not sure if it's going to be audio or visual, talking about my trading experiences and kind of the rough path that I took to figure out what type of trader I wanted to be, what type of trading strategies didn't work for me, and ultimately land as the type of trader I am today. But until that comes out, feel free to check out the rest of the amazing content that is here on the YouTube channel. All right? Until next time, plan your trade, trade your plan. Take care.